So today we are going to talk about Bitcoin dominance, and this is not the explanation you have already heard from other influencers who basically copy paste the content. We are going to talk about why Bitcoin dominance is now irrelevant as an indicator. I realized that I think after 2-3 months last year of introduction of Bitcoin ETF, and I had conversations about it with my students in the classes, and I told them that it will take people some good amount of time before they realized it. I have given everyone 1 year and no one has realized it until now. So I'm coming out and explaining it. Hopefully this will address the overall confusion why Bitcoin dominance is so high and why Bitcoin dominance is not having any form of impact on the market, and whether Bitcoin dominance is going up or down, your bags are all fucked up and there is nothing in the altcoins. Why is that happening? The reason for that is simple. Bitcoin dominance basically has a broken relationship now with altcoins because of ETF. This is the shorter version of it. Previously, money would flow into Bitcoin through crypto in form of stable coins or directly spending dollar on Bitcoin, buying it. Money would enter the crypto market that way. When they would sell that Bitcoin, that amount of funds that they would get, it would be again in form of crypto. So it would be a pair of, let's say, Bitcoin to USDT. I'm not going to go back in the older pairs of Ethereum or anything else. I'll keep it simple so you could understand. Let's say they sold Bitcoin for USDT. They received stable coin. Why? Because they made so much money in Bitcoin. Now, instead of withdrawing, they will have that itch to use that money again in crypto market, so that money would flow into altcoins. And that is why, while Bitcoin dominance would drop, altcoins will start flying because the money would flow from Bitcoin to altcoins. Now that thing doesn't happen because the relationship is not there anymore. Now money directly goes from dollar to Bitcoin, Bitcoin to dollar through ETF. As there is no relationship anymore between altcoins and Bitcoin because of ETF, there is some relationship left, but the majority of relationship is broken. Now Bitcoin dominance is totally irrelevant, which means that now you cannot use it as a form of indicator. Not only it has led to this kind of problem, it has led to other forms of problem as well. Before I go to that, I'll explain why Bitcoin dominance matters and what the hell is Bitcoin dominance. Why is one coin deciding whole market's future? Because this is not something that you would see in stock market. In stock market, you do have multiple assets that are over $1 trillion. And even the gap between them, it's not that crazy. They have, like, if you have 1 trillion, then you have 900 billion, 800 billion, 700 billion. You don't have this kind of situation where you have Bitcoin at 2 trillion and then you have Ethereum at 380 billion or 400 billion. And if you just go down 20 coins, all of a sudden from 2 trillion, you have gone down to 1 billion. This kind of stupidity only exists in crypto. But that's not the only reason for it. The major reason for it is pairing. If you go back in time and you think of the first crypto ever, which was Bitcoin, you didn't have to pay for it. You had to mine and get it. That's how it was getting into circulation, from circulation to people's wallets. Later on, Ethereum came, they became a pair. So it was BTC slash Ethereum or Ethereum slash BTC. It became a pair, but as we developed, there were no stable coins. This USDC, USDT, all these fancy people, they came later. We didn't have stable coins in the market. So every bloody coin initially got paired with Bitcoin, and they all are in the denominator form. So you have your coin, then the one that is dominating is in pair with it, which is Bitcoin, which is something that in form of a relationship is still there. Like, I think it's VeChain. If you go and check, VeChain always has more volume with the pair of Bitcoin rather than USDT. Just for the sake of argument, I'll just go and check it. because from top of my head, because I cover so many coins, I always mistakenly go and click on the pair of Bitcoin instead of USDT, because generally I go for the top one. And when I click in case of VChain, if I recall it correctly, hopefully that is the case. The pair that I end up clicking is always the one that is with BTC. You see, it says VET/BTC. This is number one. Why? Because it has more action. The USDT one is the second one. So this relationship in many coins is still surviving, but if you go back in time, it was all about Bitcoin. So this overall relationship is what fucks everything up. If Bitcoin is dying, the rest of the market is dying with it because it is paired with it. If you are handcuffed, let's forget about the math. If you are handcuffed to something and that thing starts sinking, you are going to sink with it. Let's put it like that. But that's not the thing. The thing is right now that this relationship is broken. Now it is a relationship between USD and BTC with guest appearances of USDT and BTC. So the overall relationship of altcoins with Bitcoin is broken. And now this indicator is useless. You can use it for fun. But to me, like I said, from last year, I think it was somewhere around April or March, I realized that, and then I was having classes and I told my students that this is going to become a totally useless indicator. It's only going to mislead people unless you do the math and you remove the USD factor out of it, which means that you factor out Bitcoin's value and you reduce it. So today, if it's sitting at $98,000, if you hear sounds, it's my cat. He realized I'm making videos, so he started singing. So if you see that Bitcoin price is $98,000, you need to remove the overall US dollar impact out of it, which will reduce the Bitcoin price. And maybe in reality, the Bitcoin price would be $60,000 or $55,000, something like that. But right now, as you're seeing it at higher price, it's not because it's altcoins pushing it, it's because US dollar is pushing it, because there are people out there who have some disabilities. They're incapacitated, and as they can't do anything, like going and buying Bitcoin on their own, they go to ETF, they buy it from there under the name of, I don't know, security or privacy. That kind of bullshit somehow continues to fly with mobile phones as well. It's one of the reasons of success of Apple. But I didn't know that it will continue to fly throughout. Anyway, everyone for themselves. That's all I can say. But the overall thing is that if we talk about Bitcoin dominance, the dominance basically has created a massive impact in a sense that it has started misleading people, and that's why I wanted to come and discuss that. Another thing that this opening of the USD dollar door has done to crypto is that now the macroeconomics have an impact on crypto. We didn't have this kind of impact in 2016, 17, 18, 19, 20, 21. I was there from 2016 till 2021. I was there in the market. We didn't give a rat's ass about CPI or PPI. No one had any idea what is PPI. No one cared about inflation rates. No one cared about the stock market. There was no relationship whatsoever. But now, as the money, when the moment they sell Bitcoin, the money goes to USD. That money directly flows into gold. That money directly flows into secured havens. In their eyes, whatever is secure, when they get the money in the bank, it doesn't just sit there. They go and invest in something. Why? Because they sold Bitcoin. They were expecting a crash. The crash happened. I'm talking about big investors, right? They take that money, then they go and they find safe havens. That wasn't the case scenario in the past. In the past, when they would sell, they would be still in form of crypto. So when they would rather like to invest, but or even if they were not investing, they would stay in stablecoin. They wouldn't cash it out. It wouldn't flow into gold or other things. So the macroeconomics didn't have that kind of impact as it has now. I understand the part that, okay, yes, people are getting educated, but why are people getting educated? Because they're getting forced to get educated, because now there is this linkage. Previously, there was no linkage, no one cared. No one looked at any form of indicators. Now everyone is looking at the volume. Everyone cares about the fact that on weekend volume is low. Everyone cares about the fact that this is the opening time, this is the closing time, this is the open interest. They have started talking about things that no one ever cared about anything back in the days. Even when futures were introduced into the market in 2017, I think that was the time, I think, that we were concerned that, okay, margins and futures, they're going to have an impact on the market. But we still knew that, okay, the manipulation is not going to be that crazy. We still found ways to deal with it. But now, as there is this overall relationship is broken, I think that this is one indicator that you should avoid. You should go and look for other things in order to survive in the market. If you continue to use Bitcoin dominance, it's only going to lead to bad decisions. Bad decisions in a sense that if you see that Bitcoin dominance is going down, you would think it's going to pump altcoins, and you would go into altcoins only to find out you're getting more screwed. Or you might be waiting for Bitcoin dominance at 40, 50. You might have a target, and Bitcoin might never go to those areas, and you're mistaken about it. Anyway, I just wanted to come here and explain. I hope this has helped you.